Hey everyone, I just wanted to drop a little video. Very interesting day today for a change, because the last week we sort of saw, after September expiry, we thought that that sort of post-collar kind of unclenching would kind of free up stocks to move around. But we really saw a lot of gamma still around, not a ton of gamma, but kind of keep things in there, right? So they were buying every dip, and we certainly had a lot of reasons to sell off. We had the strike, the union strike in the U.S. We had the geopolitical situation, of course, Iran, Israel situation, to put it mildly, really flaring up and promising to probably be a little bit more durable and longer lasting, and maybe serious than the flare up that we saw in April. So that is quite worrisome. And then I think, and this is something that I've talked about for months now. I said I've been kind of relentlessly making fun of people who are saying the recession is coming, the recession is coming. I said, there's no recession. There isn't the slightest indication of any kind of recession. The unemployment rate was just nonsense, supply related, all that kind of stuff. I put a lot of that in my newsletter, if you guys got it. If you don't get the newsletter, look down in the description and jump on there, and I'll send you my Let's Talk About Volatility, Crush the Premium ebook as well, which talks about vol and some of the ETP products, the VIX products. Really great way to kind of get familiar with some of those things and how they work. So really, the market is kind of in a little bit in flux here from the standpoint of fear versus actually what's happening. So if we look at this, we can see 30-day volatility. So this is actual volatility. When we talk about option pricing, implied volatility, that's sort of the expectation of what the market it could do going forward. Realized volatility, or historical volatility, is actual volatility. And so we saw this sort of JPM quiet collar kind of environment finally seep in. And so we saw volatility just kind of plunge over the last couple of weeks. Yet we saw the VIX stay up around 1920. And today we're up at almost 23, which is actually starting to get into concerning territory. So you look down here, if you look at the VIX index versus S&P realized volatility, so actual volatility, remember, the gap is about 11 points, and that's sort of up around the 96th percentile for the last 8 years. So what this means is, where is volatility? Where are options priced? Think of those as actual fear level out there. Where are people pricing the insurance? That's kind of an indication of where is their level of worry. Their level of worry is extremely high versus the actual movement we're seeing in markets. So it's unusual what we're seeing. We've sort of been talking about this for a couple of weeks, how there's something strange going on. We saw, just to harp on early August and early September, where, again, I keep saying it's like too many people trying to get out a very narrow exit. And we saw the results of really what was people not being interested in any kind of downside hedging, and suddenly everybody had to have hedges again. And the volatility market, the market for protection type strategies out there couldn't handle it. And so that was very interesting in itself. And so what we have now is this kind of backdrop of, we've gone from the market being primarily concerned about inflation for the past almost 2 years to suddenly being concerned about growth. Remember that growth scare that we had for about 20 minutes there, which was ridiculous. And then suddenly we saw that the data just kept coming in strong. Manufacturing come back, retail sales, just great data all around, good GDP. And sure enough, what do we get on Friday? We get this huge jobs number, a blockbuster number. And the unemployment rate dropped to 4.1 from 4.2 and 3 not long ago. And so we're back into this sort of period where I think, and I've been saying this for weeks, for about a month now, saying I think the current worry is going to suddenly, the narrative is going to switch into, is inflation coming? Is there the risk of inflation, right? So here's the famous chart of inflation, current inflation in the past sort of, let's say, 7 years in the blue line, the blue part of the chart here, superimposed on the inflation that we saw in the 70s. And look at what happened here. Look how kind of eerily close this is. And so this is this moment here. Are we going to repeat this reignition of inflation at some point? And I mean, Powell, I don't know what he's thinking, but Fed governors have been coming out saying, well, hold on, maybe we need to be careful about this. I get that real rates were really, really high, but there was not a tight environment. Nothing was slowing the economy. There was no reason to really cut rates from that perspective. So the real resting rate for rates probably isn't going to be anywhere close to what bonds were thinking of up to very, very recently, right? We had these massive rate cuts implied for rates over the next year and a half to 2 years. And that was kind of implying recession. While stocks were kind of implying that everything was fantastic, that we're in a growth type environment. I mean, you look around and even, business confidence, small business confidence flying through the roof, almost as high as it was pre-COVID or pre-rate hike, which is incredible when you think about it. They haven't even started cutting rates. So things are very, very good in the economy, and yet there's all this sort of hope that they're going to cut rates, which is just going to overstimulate, in my view. And so here we are. I mean, this is just, it's too close to what we saw in the 1970s. So I think there really is a risk of that. And we see here, look at unionized wages shooting up. Of course, non-union coming down, but how long will it be until this starts to kind of stabilize and follow? We can look at China as well. We've had the bazookas firing in China. That changes the situation as well from the standpoint of how aggressive can we be on rate cuts. Because if China is coming back online, and that wasn't just a little bit of innocent stimulus, that was like across the board, they're finally giving in and trying to stimulate in any way possible. So are we going to start seeing China come back into the mix here and drive up pricing for commodities, in prices for things in general? So we've seen this very interesting environment where I think the market is starting to kind of, worry a little bit about that, worry a little bit about the potential reignition of inflation. Now, a little bit of inflation with a strong economy is fine. I think the stock market's really going to like that. A reignition of inflation in a more meaningful way is going to be somewhat troublesome. So right now you've seen this incredible, I talked about this on the Leduc show last week, very, very high beta to S&P movement in terms of what the VIX is doing. So 99th percentile, 98th percentile, what that means is when the S&P goes down a little bit, the VIX really, really takes off. So it is like that cat in a room full of rocking chairs, right? I kind of like that analogy. And as you add rocking chairs, the cat gets a lot more nervous. And so we are adding rocking chairs, right? Maybe we took away that inflation rocking chair at one point, but now we're adding more things to it. Longshoremen, China bazooka, the economy doing really, really well, potential wage inflation happening in some ways and potentially getting worse. So this is a thing that the market is quite nervous about, and volatility markets are quite nervous about. And even beyond that, the Japanese carry trade and whatever happened in August, there's something interesting going on behind the scenes, and I don't think we fully understand it yet. And maybe it's just everything's kind of a carry trade in a way. I mean, it's all just based on massive amounts of debt and money printing. You look at money supply just starting to go through the roof again, which was part of my thesis for Bitcoin kind of rallying back. There's sort of strange things happening. So you've got this Iran-Israel ongoing tension, longshoreman situation under control for now, on pause, nervousness into that non-farm payroll number on Friday, pulled the VIX back to 19, but it has taken off again. 4 points, VIX zooming to 23. So this did not calm things down. And I think that's very, very worrisome, because you took a big piece of last week's data puzzle out of the equation, but the result of it was probably pointing to that inflation that I've been worrying about, and that's a problem. And then of course we sort of still have this absorption of election volatility, right? The VIX looks ahead. It's now looking a little bit beyond the election, so it becomes less important as to the specific event, but there could be some associated shenanigans. So as long as Harris and Trump are kind of close and neck, this premium remains in the market, right? If there was sort of one breakaway leader in the polls, then markets could kind of understand that. But remember, markets don't like uncertainty. Even if the outcome isn't particularly disastrous one way or the other. I mean, they're both going to be inflationary. We're going to come out of the election with a president, right? There's going to be a president. Maybe there'll be some arguing, but there's going to be a president. So when you think about it, it really isn't that big a deal. Sure, there will be some shakeup within sectors and certain industries and things like that. It's going to react to that. But overall, I think it's more the uncertainty of not knowing what's going on, what's going to happen in the election that markets don't like, the uncertainty of it all. So in the community, we put on a Baba Condor. That's part of the China kind of massive inflationary kind of reinflation trade that's been going on. We've seen in many areas, and so the idea is that a lot of people think that iron condors are really about theta, and they're as much about vega, in my opinion. So you want to put them on when vol is a little bit high and you think it has a chance to kind of come down. So I think we've sort of seen Baba find a little bit of a level between 110, 120. In my mind, you're getting some really nice wide wings at Condor. There's the market closing. Really wide wings because of this massive high implied volatility there, 100th percentile. Visa, we closed our call, our cash secured put. Just, there's some talk of, limiting how much credit cards can charge, whether that, probably won't come to pass, but we took that off a little bit for a small gain. Tesla added an upside calendar, right? That event vol is kind of high in Tesla, right? We've got that FSD happening, and I think that's a chance for you to own a little bit of forward vol, meaning you own a little bit longer dated and you sell that front vol, and that could be kind of a nice play. That's the only kind of event vol I like to sell. So as I teach in my course, I don't like selling, cash secured puts on earnings and things like that. That many studies have shown, or a number of studies have shown, that doesn't make any sense, and there are a lot of good reasons for that. But the only kind of event, and we did one recently, we had a nice move on the Micron. We made money on earnings on an upside calendar, which is, to me, that's kind of the best way to play these situations. We've got that XL risky that I talked about on the Leduc show with Samantha. Really nice play there. And XLE is one of the things that's kind of hanging in there a little bit today because of course, the geopolitical worry. Salesforce, McDonald's, Amazon cash secured puts, okay, coming under a little bit of pressure today. We'll have to see how that plays out. Uber still looking really good. Ulta pulled back. We made money on that collar, that protective collar. Hopefully it hangs in there, and we can kind of rinse and repeat that collar when it rallies back up. Apple, we took a loss on the calendar that we had to the downside, expired October 4th. But we are short some cover calls, so aggressive cover calls against that. And so that's working a little bit today. VST, ridiculous run. We got capped out on that collar. MCHI as well. Palo Alto, we're long stock with some puts. So that's been doing okay. We're above our cost basis there. SoFi risk reversal has been doing fine. And our CLSK has pulled back. I did a little video on this on the weekend. And it's pulled back a little bit, which is too bad. We've had this sort of nice move in MSTR, which is a much better proxy. We had a position on that did extremely well, up 500% a couple weeks ago. And it's a much better tool than some of these miners that are just, not great stocks. But I'm convinced that if Bitcoin can get into the 70s again, these miners are really lagging. So lots of fun things going on, and you can follow along if you join the programs, get into the community where we talk trades, we have charting packages, we have various systems, stock systems, volatility systems, all kinds of great research, a lot of good stuff going on in there. So Worth the price of admission alone to get into that community, but you get the program with it because I don't just let anybody in. I like people to learn about what's going on. I want to teach you that before you come in and kind of join the community and enjoy that camaraderie that we have in there. Otherwise, you're coming in, you don't really know what you're doing, and I don't think options are the best way or the best thing to get into in terms of just sort of following some alert service and just kind of mindlessly just following along with people. I think that's almost a guaranteed way to get into trouble, and I've seen it happen in Discords where people just sign up for alerts and they go, "Whoa, I didn't think that could happen. You didn't tell me that in the small print." And guess what? There wasn't any small print. So, and then their adventure with options is pretty much over for the rest of their lives. So I want people to really understand risk, reward, what can happen, what can't happen. A beautiful thing to get into, but really you have to know what you're doing. And so I believe that teaching you to do those things first, many of them. I mean, you never stop learning, but I think that that's a really important part of this process. So that's it for today. We'll see you guys on the inside and in the next video. See you soon.